I think insurance industry is not only ready for AI, it has actually been fairly proactive in adopting different components of AI. So if you look at things like robotics process automation, RPA, augmented reality, insurance industry has actually been using it for a fairly long time, and they've been doing a pretty good job about it. If you look at areas like customer segmentation, fraud detection, straight-through claims processing, those are areas of the insurance value chain where you've seen companies like, I won't name companies, but you've seen primary carriers do a really good job and spend a lot of sort of technology and dev effort in. I do want to point out that AI is a very broad concept. So if you talk about things like deep learning and image recognition, those obviously are areas that are still being worked on. We have seen a lot of progress in image recognition over the last, I would say, 18 months, especially in the insurance industry. As we see an increase in IoT adoption, both within personal and commercial lines, we think we will see an increased adoption in AI, not just in the use cases I just described, which are customer segmentation, fraud, and claims processing, but in more broader areas of the insurance value chain. No, it's not surprising at all, and it sort of validates what I just mentioned earlier. It may come as a surprise to outsiders, but insurance industry has been a big and an early investor in technology for a very long time. Clearly, we have to be cautious about what we do due to regulations and in order to preserve the trust that customers place in us. But to the extent that we are able to improve customer experience, reduce risk, and better manage claims, I think we have been very open to technology investments. To give you an example, insurance companies have been innovating in the area of providing comprehensive self-service capabilities to their customers for at least 5 to 10 years now. Whereas if we look at some of the larger tech companies, that's an area where I think they are not quite where the insurance industry is. So the obvious answer is mispricing and mismanagement of claims. I think mispricing of risk becomes less and less an issue as AI evolves, because it sort of becomes a virtuous cycle, right? As we collect more data, we're able to create better models. As we create better models, our pricing improves. As that improves, we commit more money to generating better data, and then the cycle keeps repeating itself. So I think there is less and less risk as we move forward. Obviously, the one risk would be jumping the gun, where we sort of over promise or over anticipate the capabilities of AI and jump the gun a little bit. So I think we have to be cognizant of that, and we have to realize that not every type of risk analysis can be automated at this point. But areas which have large amount of transaction history, where the velocity of transaction is high, those do lend themselves well to automation. As we chase the artificial targets of 90-second claim settlement and things like that, we do run the risk of creating processes that are not ready for prime time yet. We have to understand that claim settlement is a matter of trust, and that trust involves claimant, the insurer, but also other policyholders within that ecosystem who have not filed claims. So the last thing you want to do is you focus too much on speed, and you repeatedly misassess losses, which essentially means that you're taking money away from claimant policyholders and passing them along to the others.